The market is simple. Traders are the ones who make everything complicated. There is a truth that most traders do not want to face. Trading is fundamentally simple. It's just that traders hate that simplicity. You enter the market with a very familiar belief. The market is complex. You need sophisticated strategies. You need indicators stacked on indicators. You need to understand the secrets that most people don't know. But after many years, what wears you down is not the market. It is the way you look at the market. The market does not demand that you be smart. The market does not require that you predict the future. The market does not force you to trade every day. The market simply repeats a few very boring things. When there is a trend, there is opportunity. When it is unclear, stay out. When risk is uncontrolled, you get eliminated. The problem is, traders cannot tolerate that boredom. So, we create complexity to feel like we are doing something important. Just like life. You see this everywhere in trading. Morning routines that last 2 hours before placing a trade. Systems with grand-sounding names, strategies few people know about. Setups that require endless conditions before you dare to enter. But then, what are the results? Most traders still overtrade, still break discipline, still enter trades based on emotion, and still lose in the same old ways. Not because they lack knowledge, but because they confuse complexity with safety. The hard truth to swallow is this. Complexity does not make you safer. It only makes you more exhausted. The market does not reward elaborate systems. The market rewards those who do less, wait longer, enter at the right time, and can tolerate the feeling of doing nothing at all. And that is exactly what traders hate the most. The first paradox. In trading, the harder you try, the worse it gets. Every trader has been in this state. The harder you try to recover, the more you lose. The more you want to win back, the more mistakes you make. The more you fear losing, the dumber your trades become. This is not a personal flaw. This is an inverse law that operates very strongly in trading. You cannot force yourself to be calm. You cannot force yourself to be patient. You cannot force discipline, just like you cannot force yourself to sleep. You cannot force someone to love you. You cannot force your brain to stop being afraid when money is at risk. The more you force, the tighter the nervous system becomes. The tighter it becomes, the more the brain shifts into survival mode. And in that state, every decision gets worse. Traders don't fail because they don't try. They fail because they try too hard in the wrong state. Trading when exhausted. Trading to prove something. Trading out of fear of missing out. Trading because they cannot stand the feeling of staying out. The market does not punish you immediately. It lets you destroy yourself slowly. Correct effort in trading is not tightening the grip. It is controlled looseness. You still have a plan. You still have rules. You still manage risk. But you do not cling to outcomes. A mature trader understands a painful truth. The market does not reward desperation. It rewards those who are lucid enough to stop, even when the ego is screaming. Control, the most dangerous illusion of traders. One of the biggest mistakes traders make is believing, if I control everything tightly enough, everything will be fine. And so, you begin. You plan every possible scenario. You calculate every direction price might move. You simulate every outcome. You prepare responses for the future. But the market only needs to do one small thing, move against your expectations, and you collapse. The market is not fighting you. It simply does not care. You cannot control where price will go. You cannot control when news appears. You cannot control how liquidity changes. The only things you can control are very few. Whether you enter a trade, how much you risk, whether you stop, and how you respond when you are wrong. A smart trader does not try to be the CEO of the market. They are more like a surfer. They don't control the wave. They choose the right wave, and they know when to get off the board. Most traders die from the illusion of control, not because the market is difficult. The market is always simple. Only traders are not. In the end, if you look back on your entire trading journey, you will see one painful but very real truth. Your best trading periods were when you thought less, tried less, proved less, interfered less. And your worst losses came when you were too certain, too needy, too afraid, and too rushed. The market has never been as complex as you imagined. It is simply that the trader's mind cannot tolerate that simplicity. The trader's brain was not designed to make money. It was designed to keep you safe. There is a truth very few traders are willing to accept. You don't lose because you lack knowledge. You lose because your brain is doing exactly what it evolved to do. The market is not beating you. Your primitive brain is beating you every day. The trader's brain operates against trading. The human brain evolved to avoid danger, seek certainty, react quickly, hate ambiguity. Trading requires the opposite. Accept risk, tolerate uncertainty, act slowly, live with ambiguity. These two are fundamentally in conflict. When you put money into the market, your brain does not see opportunity, it sees threat. And when the brain detects threat, it activates an ancient program: fight, flight, or freeze. Traders call this lack of discipline, weak psychology, insufficient mindset. But the truth is, your brain is doing exactly what it was programmed to do. The problem is not how to make the brain stop being afraid. The problem is how to prevent a fearful brain from taking the steering wheel. 90% of trading decisions come from emotion. You think you enter trades with logic? No, you feel the urge first. Then the brain begins to invent reasons, select indicators, search for confirmation. The rational brain does not make decisions. It acts as a lawyer defending decisions already made by emotion. That's why, same chart, same setup. But each time you enter, the trade is different, not because the market changed, but because your internal state changed. When you're tired, you see more signals. When you're afraid, you see more risk. After a loss, you see recovery opportunities. After a win, you feel very right. The market doesn't change. The filter in your mind does. Bias, the silent saboteur of traders. Your brain does not seek truth. It seeks a sense of safety. To do that, it uses many biases. Confirmation. Bias, you only see what supports your beliefs. The chart contradicts you, you ignore it. Loss aversion. You fear losing $100 more than you enjoy making $100. So you hold losers. You cut winners early. Illusion of control. You believe that more analysis will change outcomes. It won't. You're just soothing fear. Overconfidence bias. 90% of traders believe they are above average. The market exists because of that belief. You cannot erase these biases. You can only notice when they are driving you. Awareness won't help you win more, but it will help you lose less stupidly. And in trading, that is survival. The problem is not emotion, but reaction. Emotion is not the enemy. Unconscious reaction is what kills traders. Fear, greed, anxiety, excitement. These are normal, but the pause between emotion and action, that is where the difference lies between a novice trader and a long-term survivor. Weak traders react immediately. Strong traders let emotion pass. Emotion is like a wave. You don't need to fight it. You just need not to paddle when the wave is high. Many traders don't lose because of the setup. They lose because they enter trades with a hot head, hold trades with a fearful heart, revenge trade when the ego is wounded. Why do traders know everything yet still fail? Because knowledge lives in the cortex. Behavior lives in the emotional brain. You can read hundreds of books, watch thousands of videos, understand every possible mistake. But when money is real, time is real, and emotions are real, what drives you is not knowledge. It is your nervous system state. Trading is not an IQ game. It is a game of the nervous system, endurance, and clarity while doing nothing. Mature traders do not seek to win, they seek not to destroy themselves. A major psychological shift happens when you realize your number one job is not to make money. It is not to sabotage your own system. You don't need to trade more. You don't need to be smarter. You don't need deeper analysis. You need to stop at the right time, rest when tired, stay out when the mind is unstable. The market is always open. Your mental clarity is not. Survival, small habits, and how traders get eliminated. If you've been with the market long enough, you'll realize a cold truth. Trading does not eliminate you in one day. It eliminates you gradually, through small choices you barely notice. Not one big loss, not one dramatic blow-up, but things like, just one more trade. I'll break the rule just this once. I can rest tomorrow. My mindset is a bit weak today, but I can still trade. These don't hurt immediately, but they erode you over time. Small habits. The invisible destroyer. Traders don't have bad habits. They have perfectly functioning loops, just with terrible rewards. Every loop is the same. A trigger, boredom, fear, FOMO, emptiness, a behavior, entering trades, moving stops, holding, revenge trading, and a reward, the feeling of doing something. Your brain doesn't care if the trade is good. It only asks, does this behavior reduce discomfort? And so, many traders trade not to make money, but to feel less anxious, less empty, less useless. The market becomes a temporary sedative. You cannot delete habits. You can only replace loops. Keep the trigger. When tired, when tense, when FOMO, when empty. Keep the reward. A lighter mind, less discomfort. A sense of control. But change the behavior. Stand up. Go outside. Journal. Turn off the screen. Or do nothing for 20 minutes. Strong traders are not those without urges. They are those who don't let urges decide for them. The compounding effect. What kills traders and what saves them? Trading is a game of mathematics, not emotion. 1% more discipline each day creates massive differences over years. But this effect also works in reverse. Each time you skip journaling, break rules, trade while tired, fail to stop on time, you don't lose money immediately. You lose trust in yourself. And once you stop trusting yourself, you start to enter trades hesitantly, exit too early, hold losers incorrectly, overtrade to regain control. Traders don't collapse because of the market. They collapse because the relationship with themselves breaks. Surviving traders don't optimize profits. They optimize energy. A big mistake is thinking, I must trade more to improve faster. No. Long-lasting traders know when not to trade, when to stop for a week, when to only observe. The market is always there. Your mental energy is not. You only have a limited number of clear years. Before burnout, before boredom, before losing belief. And the market will not refund those years. Trading is not about finding yourself. It is about creating yourself. You don't discover a trading style. You build it from small choices, small habits, and how you respond every day. Mature traders don't ask, how do I win more? They ask, how do I stop destroying myself? 3 core principles of survival. 1. Accept what you cannot control, which is almost the entire market. 2. Master what you can control, actions, risk, reactions. 3. Install small improvements every day, small enough not to overload the nervous system. You don't need genius, secrets, big wins. You just need to stay in the game, stay clear-headed, and stay disciplined with very small things. That is enough.